Thanks for tuning in to Talking Point. I'm your host, Neeraj Shah. You hear from a bunch of experts about how they are now largely ignoring what the headline levels might be and focusing on where businesses are generating cash flows, higher earnings growth potential, better return ratios, and better growth opportunities over the course of the next 3 to 4 years, and trying to build a portfolio around those to create alpha. And that is the question that we'll ask to Sameeksha Capital's Bhavin Shah about what is it that he is trying to do, what is it that he and his team are trying to do at Sameeksha to try and create alpha for their investors. Bhavin, great having you. It's been a while. Thanks for taking the time out.
Thank you. Thank you, Neeraj, for having me.
No, the pleasure is entirely ours. So, Bhavin, how have the last 6 months been? Portfolios doing well because it's been, chop and change for a bunch of portfolio managers out there. And what's your stance for the second half of the current calendar?
Yeah, so we have had a pretty good second half of FY23, and we have continued to participate really well in the first few, I think, first 2.5 months of the year. So we have been able to, outperform, and that has been purely through a couple of important things. One is definitely stock selection, but secondly, we made a shift towards a bit more towards small and mid cap, primarily small cap, where we saw a fairly large number of opportunities. Because I think if you look at, I think both from a top-down perspective as well as bottoms-up, we were finding more ideas. And then secondly, from a valuation standpoint, also small cap relative to the market, relative to the large cap, had become more attractive. And I think the great thing about Indian economy and Indian equities is that, I think the flow of new companies and new opportunities to invest in small cap, it continues to be very strong, either through new listings or, through previous listed companies, seeing some very strong trends in their business, for a number of factors. So that's how it has been. And I think we remain, by and large, close to being fully invested, primarily, working to find, superior opportunities if there are compared to what we hold, and especially with respect to stocks that may have already performed for us.
Interesting. So, okay, let's try and probe that a little bit. What are those pockets where you've had conviction and where stocks within the particular themes have rallied a bit already, and you find that even though the growth opportunities may be strong, but are well priced in? Because I see a lot of that in the performers in the last 6 months, but we'd love to understand your view.
So, interestingly enough, we saw opportunity in even in the mid-cap IT space. I think obviously there was a lot of pessimism about the outlook, with respect to the U.S. economy and the U.S. corporate and so on. And I think we also had a bit of depressed margins that were coming through from this company, especially they were seeing a lot of cost pressures with wages and so on. But in the meantime, there are always some pockets of opportunities that we can find, in the sector where the secular demand growth is still pretty robust, while it may not be what we saw, during the couple of years of COVID. I think it can maybe go back to pre-COVID kind of levels, but I think it is still reasonably strong to create large enough opportunity for some of the small and mid-sized companies, which may be, trying to expand into new areas of growth and so on. So we saw some opportunities in there. We saw even opportunities to make money in companies related to wealth management, because I think that's really a nascent area for India. And I think there are some companies which are doing really interesting things to create a material competitive advantage that can, have a lasting impact. Mm-hmm. So I think that is another area. We saw opportunity in the traditional sort of the building materials slash pipes related segment, cables, pipes, where some stocks were very depressed, available at very good cash flow yields. So we saw some opportunities there as well. And so I think these are some of the stocks that have participated even I think when there was this entire thing going on with the Adani Group, we saw there were within that pack there are one or two companies which actually have very strong business to look at, and that got massively mispriced. So we saw opportunities there as well.
Interesting.
So it's been in a very different ranges. I think even in financial services, I think we saw some opportunities where either that the companies especially like say small finance banks or some of the sort of slightly regional banks having global national footprint, uh, seeing major turnaround in their business.
Let me probe that a bit. Your this answer. So, IT. When I think of non-large cap IT, the ER&D stocks have had a fabulous run. In fact, just before the interview, I was looking at the YTD returns for the BSE 500 pocket, and it is also punctuated by stocks like Zensar and a few others too. So, IT is, as you rightly said, broader end of the spectrum. The mid-cap IT space has had a good move. Now, somewhere, Bhaven, the valuations of the ER&D stocks are looking stratospheric, and in some cases, the stocks are coming back from the nadir and now starting to trade at mean valuations. Would you be skeptical of these stocks here on, or would you believe that the secular growth argument might hold them in good stead?
I mean, it is really, I have some of these names we haven't participated, and when we look at it with the hindsight, it looks like missed opportunity for sure. And I mean, I would not rule out any of those companies purely just based on valuation. I mean, it is unlikely that we will be buying them today, but I think some of them do have very, very strong growth story ahead of them. So one has to keep an eye on them, and I think maybe the opportunity emerges at some point to go back and buy those. Yeah, from our portfolio approach perspective, our investing style, those companies are unlikely to fit our framework. But I think I do admit that they have very strong growth ahead of them.
Got it. Okay, what about large cap IT, Bhaven? Because you kind of used to track this space individually better than most. You might still have this hang of what could large cap IT go through, even though you're tilted towards mid caps and small caps. It may not be a part of your portfolio, but just trying to understand. Do you see pain ahead for the longer term, or are valuations in some cases pricing that in?
I think so. Large cap IT. I think what they face is overall, their size limits their growth potential. So they become great opportunities either because there is some temporary blip in the growth rate, as was the case around COVID, and there was a big correction also. So that both of things combined made them interesting investment choices. Or if there is some bit of turnaround in the company, in the way they are looking at business, the way the management is, the change in management, or how they are thinking about their future growth strategy and their focus on shareholder. So in that regard, we do find one or two opportunities in the large cap IT as well. But I think we are doing that, being aware of the fact that the growth rates for those companies will be subdued compared to what we saw in COVID. And I think one has to be realistic in terms of return expectation as a result of that. If somebody wants, say, say low teens, 10-12% return, maybe I think it is still possible in some large cap IT. But I don't think we are going to get much higher rate of return from that.
Okay. There are pockets which are now starting to come to the fore. I'd love to understand from you. One is from your home state of Gujarat, this whole Gujarat state PSU policy that was unveiled. You must have had a close look at it. Whether or not you invested is a separate case. Now, these stocks have traditionally been value stocks, if you will. Now there is a policy aiding dispersion or disbursement of high cash as dividend. Does it make them attractive, or do you still see reason to avoid them? I don't know if you avoided them or bought them, to be honest. I'm just trying to understand because the market isn't quite going out there and giving them the bang for the buck.
So I think have looked at this space. No, I won't say very closely, but have looked at this space for at least more than 10 years now,
Uh-huh.
and I see like a full cycle turning, coming back. There were some of these companies which were paying, say, having payout ratios 25-30% in some cases. Then suddenly that changed, and there was even this talked about policy of using X percentage of profits for some other activities. And so now I think somehow there seems to be a realization that we need to have some commitment, but it is not meaningful enough in my view. And my fundamental issue with these companies is while each of them have some inherent advantage, some of them are first movers, some of them have a low cost infrastructure in place. They are in a product where there is not a whole lot of competition. Some are natural kind of monopoly type advantage if it's like say gas distribution. How these companies are managed when one goes in and looks at it, I'm not convinced that these are well managed companies. Very honestly, and I see a lot of corruption. I see the choice of management also driven by government. So frankly, there might be a way to make money in these companies, but I haven't figured out how to. How to make it more predictable for me. So that is my, if there is a strong commodity price cycle in favor, and say, something like GNFC, goes up sharply because of that. Yeah, somebody who is well aware of that price equation can probably play that. Or same thing could be in, coal lignite with GMDC and so on. And then there is obviously the gas distribution and gas, related companies. I think ultimately, I don't see the governance to a standard where I feel comfortable owning.
Got it. Uh, no question on governance, but in some sense, the same can be said for power companies, right? They've had a very dismal last few years, if you will. COVID didn't help them. And quite recently, the commentary that has come in, let's say from the wind power companies, the statistics around peak power demand in India only moving higher with every passing month. Does all of this make this sector an interesting one to study? Have you looked at it? Do you like it? Different facets within that space or otherwise? Can you talk about it?
Honestly, haven't looked at it in great detail. There is a lot of buzz around some renewable energy, wind in particular, because some policy changes that have come through. So there is some excitement there, and I think maybe we'll take a look at it. But overall, no, we haven't spent a lot of time looking at the sector.
Fair call. I want to talk about the pipe companies then, something that you referred to. Now, managements after management had come out and spoken about how their capacity utilization levels are lower, but improving, starting from Q2 itself. And then we've seen the evidence of higher sales and better utilization in the quarters to come from multiple companies. Have this done their bit already, or do you believe that there is still some steam left because of the real estate cycle-led demand or what have you?
So I think again there is there are different investment approaches. Some are purely focused on growth, and I think they will find that some quality businesses will deliver good growth, and maybe on that basis one can invest. For us, growth has to be at the right value, and I think so. We have seen some appreciation in some names, and I think we are reevaluating whether to invest or exit or look at some other ideas. I think there are the number of companies to look at has widened, so I think it is possible. I think so. What you put is very important, that the tailwinds for the sector are there. There has been very good recovery in real estate sector. I think there is still seem to be some steam left in that. The input costs have come off more reasonable. So I think there are some positive factors for the sector. So one can still look at it, but I don't think it is. If somebody is looking for a great value, I don't think the time is there anymore.
Got it. So, Bhavin, where is it that you now currently find or are looking at and starting to see both possibility of growth and that growth coming in businesses which are reasonably valued?
So I think we are, I mean, I think it's difficult to give a when you bring, see, the growth opportunities are there, right? Even growth, you mentioned about the real estate related, demand. So it's going to be in not just in pipes, but other building materials, you know, cables and sanitary ware and so on. So there is going to be growth in many sectors, I think. But whether there is value or not, that's a different question. One of the sectors which is, I think, not done well because of the rise in cotton prices and so on, is the related to the hosiery, the undergarments, and the other the clothing related companies. They have actually not done well in last 6 to 9 months.
Yeah.
Maybe with a better prices, better input costs, and and improving demand trends, maybe there could be opportunities in that segment. So that's where we are, that's one area we are looking at. We continue to like the financials, I mean, opportunities in financial space. I think what surprises me every time that I look at it is that the opportunity that is there for a well-managed NBFC focusing on the small ticket size lending opportunities, sort of 3 lakh, 5 lakh buckets, whether it's related to first home or whether it's related to a business loan. And I think because or even for that matter, gold loan, because the competition there is often the money lenders. And even with a higher cost of financing, higher cost of borrowing, some of these companies which have figured out how to run this business are seeing tremendous growth opportunity. So I think that also is a space we are quite interested in. The NBFC serving the let's call it sub 10, 15 lakh loan segment and again, one doesn't have to take a lot of risk in that space in terms of unsecured lending. I think find opportunities even with secure lending. Another space that I think remains a little bit of it's like the cash management, for example. I was surprised to see how much there has been a growth in cash withdrawals from ATMs in last 12 months. So despite so much rise in UPI and digital payments, we continue to see very strong growth in cash requirements. And that, I think, is benefiting some of these companies in that space. And market continues to, value them, with the skepticism that, eventually cash is going to go away. But maybe cash will go away only when, the whole entire, the cash economy, the main sources of that, which is corruption, and that's sort of the basic source of generation of black economy and cash. As long as that's there, and I think realistically it's not going away, these companies will continue to have very strong business opportunity. And I'm being very pragmatic about the way I describe it. Obviously, the companies will describe it in some other ways. But I think there is an opportunity, to look at this companies in this space, because and some of them are also adding new streams of revenues beyond cash management, and so I think if they're so that's where we also are finding opportunity.
Great. I mean, a pleasure talking to you today. Thank you for being with us and giving us your thoughts. Much appreciate your time.
Sorry, I can't hear you.
Okay, no, I was just saying, really appreciate you taking the time out and being with us on the show today. Thank you for taking the time out.
Thank you.
And viewers, thanks for tuning into this edition of The Talking Point.